Welcome back, everyone. Next, we have an update from Foreign Energy Technologies, Inc., which trades on the New York Stock Exchange under the symbol FET. It's a global company serving the oil, natural gas, industrial, and renewable energy industries, providing value-added solutions aimed at improving the safety, efficiency, and environmental impact of its customers' operations. Please welcome President, CEO, and Director Neal Lux. Nice to see you guys, as well as you, Lyle. How are you doing today?
Doing well. How are you, Anna?
Great. We're looking forward to your update.
Thank you. Well, hello and good afternoon, everyone. As Anna stated, my name is Neal Lux, and I am President and CEO of Forum Energy Technologies. And over the next few minutes, myself and Lyle Williams, our CFO, are going to provide an update on FET. Beginning with our forward-looking statements, I'll pause here for a quick second, and for those investors, and we'll get started with an overview of FET. So at FET, we don't drill the holes, but we do sell critical capital equipment to industry leaders that do drill deeper and faster. We don't stimulate wells, but we do manufacture consumable products that enable the world's largest service companies to frack more efficiently. And we don't produce hydrocarbons, but we do engineer and deliver processing and pressure control equipment for the world's largest operators to produce oil and gas. We make it happen by manufacturing value-added products and solutions that increase the safety and efficiency of energy production. We are a global manufacturer. Almost all of our revenue is derived from selling new products and solutions and aftermarket parts and service. We have a wide range of differentiated products in our portfolio, and our deep base of industry knowledge allows us to develop new solutions for our customers and separate FET from our competition. We make it happen in the United States and around the world. So wherever energy is produced, we are there. And since our last presentation, just last month in December, we have officially closed our acquisition of Variperm Energy Services. This is a transformative acquisition, and over the next few slides, I'm going to provide some more details on the company. So beginning with the transaction itself, with the overview, we acquired Variperm for $150 million in cash and 2 million shares of FET. With our strategic rationale for that acquisition was around its really hitting our industrial, our key criteria for acquisitions. One is that it would be accretive for our financial metrics while also maintaining a strong balance sheet. Importantly, with the industrial logic that they had, Variperm, we added a differentiated technology and a leader in a niche market. And then finally, with this acquisition, we are expanding outside the United States even more, with more international sales and production-driven demand. This deal checks all the boxes. We are adding a great business to our portfolio. We are adding 8 locations and just under 300 employees from a company that's been operating since 1969. They have highly engineered and customized products in their portfolio that are protected with patents and proprietary manufacturing techniques. And through their competitive advantages, they have generated outstanding financial results. They will make a sizable revenue addition to our company with great margins and strong free cash flow conversion, as you can see at 81% on that bottom right box. As we think about longer-term growth prospects, Variperm has a clear path of increased customer adoption in their home market of Canada and upside from international and offshore markets using FET's global distribution network. Together, we are a formidable manufacturer of highly engineered products and solutions for the energy market. This is an exciting development for FET and one we can't wait to talk more about. Again, one of the main reasons that we are so excited about this acquisition is the accretion the combination delivers. The table in front of you on the screen summarizes the financial results of FET for the 12 trailing months of Q3 2023. With the addition of Variperm, the combined company's revenue is just under $875 million, an increase of 17%. And our adjusted EBITDA grows 77% to $121 million. Margins increase 470 basis points. This is a massive improvement for the combined business. Operating free cash flow nearly quadruples, and free cash flow is up 84%. This leads to a meaningful increase in per share metrics, with free cash flow per share over $5.50 per share, while maintaining a conservative net leverage ratio of 1.9 times. The financial performance of the combined companies is incredibly strong and makes a meaningful impact to scale and profitability. In addition to building a great company at FET, we want to increase our attractiveness to investors. One way to do so is to increase our scale versus our peers. And this chart here, we compare our adjusted EBITDA versus our peers. FET alone in the light blue column, left side of the chart, the combination of FET plus Variperm in the dark blue column. Putting the companies together increases EBITDA 77% and shifts FET to the middle of the chart and the middle of our peers. Also, when comparing EBITDA margins versus the same peers, our 500 basis point improvement elevates us above a number of our peers. This acquisition transforms the profitability and margin and provides meaningful scale while improving our investment profile. So, in summary, why FET? Why is FET a great company and better investment? First, the world needs energy. Energy is the fundamental building block of economic growth. This demand will propel global investment in energy production. Our blue chip customer base, the world's largest oil and gas and service companies, will look to FET to provide the tools to safely and efficiently produce more energy. This will drive revenue as our products and solutions are critical and demand for them will grow. And with our capacity and operating leverage, this will drive margin expansion. Over long periods of time, for every $100 increase in revenue, $30 to $40 will drop to EBITDA. These are strong incremental margins. And with our capital light business model, we will convert a significant percentage of incremental EBITDA into free cash flow. Finally, we will continue to maintain a healthy balance sheet. With our low capital intensity, we have the ability to remain disciplined going forward. The pieces are in place for a great run. I am confident the employees of FET will deliver, and together we will unlock unrealized shareholder value. I'm going to pause here and hand it back to Anna for Q&A.
Great job. Okay, we do have some questions. So first of all, now that the acquisition has closed, the seller's term loan was utilized. So can you go into a bit more details about the plans for the 2025 notes, the ABL, and the seller's term loan?
Anna, why don't I try to take that answer to that question?
Okay, Lyle.
Yeah, please. So we structured our financing for the deal with fully prepayable debt, using about $90 million from an expanded ABL and another $60 million from the seller's term loan. We did that on purpose in order to be able to prepay that debt and not incur additional long-term fixed debt. We do have $134 million worth of notes that mature in August of 2025. Our plan between the $140 million of liquidity that we expect to have post-closing and 2024 free cash flow, be in position to repay those notes in August of 2024, and then further be able to pay down the prepayable debt. So we feel like what we structured with the deal is extremely valuable and flexible balance sheet funding for our deal.
Thank you for that. Talk a little bit about what you're seeing out there for additional M&A for both FET and the industry as a whole.
Yeah, no, that's a great question. I think for us, first and foremost, we need to realize the value, and we will realize the value of the Variperm acquisition. Our teams are progressing the integration. We expect Variperm to significantly contribute to FET in 2024, and exciting to us is we've identified areas of customer synergy. So I think there's upside to cross-selling our products to Variperm's loyal customer base. But as we think of other opportunities, they need to meet our strict criteria. They need to have strong industrial logic. They need to be accretive. They need to allow us to maintain a strong balance sheet. And we do see some interesting opportunities out there. I think our industry is consolidating. I think consolidation is the right answer. But we will be patient and disciplined, and we'll pull the trigger if our criteria is met and the value is right.
We have a question from Terry Mack asking, what % of your revenue is generated from products that are required for safety or other codes rather than convenience or efficiency?
That's a great question. I think in general, almost all of our products are utilized in demanding oil field applications, oil field and energy production applications. So they have to have the element of safety, whether it's to a code or to an industry practice. I would say almost every one of our products is designed, manufactured, and the quality put into them with safety of the ultimate user in mind. We operate regularly in our industry with high pressure fluids, and containment of those fluids and protection from those fluids is really important. And so that's really the basis of our design and how we implement our Q&A system to make sure we're delivering the safest and highest quality products to our customer base.
Ellen Bailey asks, first of all, she looked at your stock chart and asks about the drop in price about 4 years ago. Does it have to do with the slowdown in fracking and other production in the U.S.? Can you talk about that?
Yeah, maybe I'll start and have Lyle jump in as well. I think at the time we were over levered with our balance sheet, and while activity did slow, I think the main driver of our decline was our balance sheet. I think as activities rebounded, I think we have grown much more quickly than necessarily our stock chart would show. I think from the kind of the bottom in late 2021 to what we're going to finish here for 2023, we've increased EBITDA 3 or 4 times from where we were. So I think we've made important progress and have moved past what we saw in 2019 and 20.
Follow up from Ellen. If the U.S. dramatically increases production with the new administration, will that have a direct and dramatic result on your sales?
It would. I think, for us, we believe in a long-term thesis that energy's been underinvested for the last, let's call it 7 or 8 years. And as worldwide demand has continued to grow and supply has not grown to follow with that demand, that I think there is a pent up need to invest more. And I think the U.S. has some of the best assets that can quickly be utilized to address any shortfall. So if there is a large increase in drilling, whether it's from a new administration or from a higher price signal, then I think we will absolutely benefit. However, we are an international company. About 40% of our revenue comes from outside the United States. So if the United States doesn't drill to fill that gap, we will participate if other countries choose to do so.
Biddy Fitzgerald says a 70% increase in EBITDA is very bold. So when will you first realize and report the financial benefits from the merger?
So the merger closed January 5th of this year, and the first combined financial results will be in after our first quarter results. So it'll be in April when we present our first quarter conference call. However, we will give an update on where Variperm stands, and we'll provide an outlook here on our first quarter call in February as well.
And what was the market cap towards the high? Have there been many new shares issued over the years?
We did when our debt had a convertible equity feature to it that when we refinanced in 2020. So we did issue shares when we converted that debt into equity. So that was in the beginning of 2023. So that was a first edition of shares, and then when we issued shares here for this deal was another set of shares. So we currently have about little over 12.7 million shares outstanding, fully diluted, and that's about where we're at today.
All right, closing remarks for our viewers today, gentlemen.
Well, we want to thank you for your time. We are excited about the combination that we have here with FET plus Variperm on a go-forward basis, and we believe strongly in the long-term outlook for our industry and where we will participate.
Perfect. Well, thank you so much for joining us for this update, and we look forward to following you along your journey in the near future. Have a great rest of your day.
Thank you, Anna.
Okay, everyone, stay with us. We'll be back in just a second.